Hello and welcome to episode number 15 of the Ecuador Insider podcast. I am Jesse Bayer, joined as always by my partner Darnell Dunn. We are the co-founders and managing partners of Abundant Living Ecuador. And we, as the late great Yogi Berra said, deja vu all over again. We recorded a podcast yesterday, which by completely objectively speaking, was perhaps the greatest podcast ever recorded by mankind. And our technician here forgot to turn Darnell's microphone on. So we were...
Jesse, what he meant to say was that's why it was the best podcast.
How'd you know? So we're back recording now on Saturday, February 20th. 2016. We have a jam-packed show for you today. There is lots of news, lots of goings on, both in Ecuador and in the world that we will touch on. But first, a couple of business items. If you're in the U.S. or Canada, you can call us toll-free at 888-999-0948. That's 888-999-0948. You can, of course, catch us on our website, abecuador.com. That's A as in Apple, B as in boy, Ecuador.com. And you can email us at info@abecuador.com. I wanted to take a minute to step back today and cover a little bit of background. Perhaps you've been listening to this podcast and you've read all our stuff on the website and you already know all of this. If you don't, I just wanted to give a brief summary of who we are, what we do, how we got to this point, why we feel like we're in a position to talk about the things we talk about. So Darnell and I came to Ecuador in 2013, July 31st, I believe we flew down. My background, I was living in Brooklyn. Darnell was living on Waltham outside of Boston. My background is in real estate investing, so I was buying buildings and selling them in New York City, in Brooklyn. Darnell's background is in financial services. Darnell was working as in an investment advisory role for Putnam Investments for a number of years. I had this idea to come to South America and do a big development. Darnell resigned from Putnam, and we came down here to do that. From there, we spent a year looking for land, went through the due diligence process on a bazillion properties, figured out everything. So we, from getting our visas to learning the language to getting cell phones and bank accounts and purchasing land. We've invested in Ecuador. We've done business in Ecuador, obviously, with the company and other things. So that's kind of how we got to this point. The company was really founded based on the premise that Ecuador is an incredible place to live. Southern Ecuador in particular, we think, has just an amazing amount going for it. And yet it was difficult to access, both from the standpoint of being able to find properties and equally as important from the standpoint of being able to navigate the process of purchasing land here or purchasing real estate here. So we launched this company to help buyers and sellers find each other, to help foreigners discover Ecuador and be able to access Ecuador and all that it has to offer. And here we are, 2.5 plus years later, as far as being in Ecuador. The company opened its doors to the public around January of last year. So a little more than a year that we've been up and running, maybe a year of preparation prior to that. And here we are. So that's our background. I also wanted to touch briefly on some news that's happening with the company. So we have now finished the website for the real estate tour. I can't give you the web address yet because we're still sorting out the domains. We'll have that sorted out in the next few days. But the real estate tour is ready to go. We touched on that briefly last week, so I won't get back into it in detail. But the idea behind the real estate tour is that you can come. It's 10 days. There's a 3-day coastal extension. You can come. You can get a sense of Ecuador, you can get a sense of the Ecuador real estate market, and you can also get all of your questions answered. So we do presentations on everything from investing to banking to visas, all of it. So you can come, you can have a hands-on experience of what Ecuador is like and see all the different places in Ecuador that we think are worth seeing, and also get a sense of the real estate market and get all your questions answered. So that's exciting news. The first group tour will be starting on January 4th, 2017, a little ways away, obviously, but that's when the first group tour will start. We will be running individual tours year-round. So if you want to come, check out Ecuador, get all your questions answered, and hang out with us on a tour, you can schedule that via the website, which I will announce the domain for on next week's show, and come and do that. The other pieces of the company that are worth mentioning, so we have also a relocation services component. As up till now, that's been something we've been doing for free for people who buy real estate through us. What that provides you with is A to Z help in relocating to Ecuador. So if you need help with your visa, with banking, with cell phones, with professional contacts, with you name it, projects very importantly as well. We have great crews for all kinds of projects, engineers, architects, whatever you need. We'll really hold your hand in whatever process you're going through. So we offer that service free to people who buy real estate through us. We also are launching a standalone service. That site is under construction. That should be ready within a week or two. And then you'll be able to purchase Relocation Services as a standalone product as well. Getting your stuff here is another big one that we help with. You'll be able to purchase that as a standalone product and, move to Ecuador smoothly like an expert. The other two pieces are, and they're kind of connected, are investor services and property management. So those are two other services we provide. Basically, if, let's say you want to put a fund together of farmland in Ecuador, or you want to put a fund together of investment properties, for example, rentals, or you want to just buy an apartment building and rent it out. We can manage that entire process for you, all its components, including, coordinating. We have bilingual attorneys and accountants here who can coordinate with your attorneys and accountants from wherever you're from to ensure cross-border compliance. And, that touches as well on property management. So let's say you're buying a property, but you're only going to be here 3 months a year, or you're going to move here in a year or two, or you're busy and you need projects done. Those are all things that we handle through the company, and I'd like to say, we handle them very well. So that's a little bit of background, a little bit of company updates. We wanted to start off today with some news as far as properties, and then we will get into a whole bunch of news on the domestic and international and finance fronts.
Great. First is a price reduction on one of our most popular listings. It's a 70-hectare property just outside Loja, borders Podocarpus, has incredible views of the city, multiple microclimates, and a number of pristine water sources. We've just reduced the price of that property from $250 to $218. The owner currently has an offer on the table, but if he's still open and it still hasn't closed yet. So for anybody who has interest in that, I encourage you to check in with us via email, as Jesse said, at info@abecuador.com, or toll free from the U.S. and Canada at 888-999-0948.
That's a property that kind of has everything that people, it doesn't have a finished house, so you have to build a house. But as far as what people are looking for who are moving to Ecuador, it really has everything. Climate, views, water, flat, secluded, borders Podocarpus National Park. When I say water, I'm talking like absolutely pure, pristine water that's sourced off of the land, has a river, and the price is exceptional at this point. The offer, the owner will probably accept the offer that's on the table around 2 weeks from now if he doesn't have one better. So that's something that would need to be moved on, but at that price, it's worth moving on.
And to see more pictures or video of the property, go to the website www.abecuador.com, click listings, and under Loja, this property is titled The Finca with everything.
Said very dramatically. You guys have to read it that way too, by the way, when you look at the listing. What else? Is there other property news?
That was all on the property news front.
We are in the midst of a stretch of absolute shit weather. These last, what are we pushing 3 weeks now? 2 weeks?
Something around there.
It's very strange because this time of year is usually the nicest in Loja, but it's been cool and rainy for quite some time now, which is a little funny because my mom came to visit and I told her that the weather would be exceptional. Because it had been for months, and it rained, it poured every day, and was freezing. So.
Must be something about moms that bring bad weather. Because when my mom came last year, it was the same thing.
Yeah, and my dad that last year as well. It's been we're on a streak of parent related shitty weather. Okay, so then on to Ecuador news. Let's start. I guess we could start with Correa.
Your boy.
My boy. Correa has announced, he said this all along, but he's re-announced, I suppose, that his decision to leave office is final. Says he is putting family priorities first. I will try to hold a straight face while reading that. So I'm not going to read the article, but Correa says he's not running again, or he has reaffirmed that he's not running again. Good news, bad news, depending on how you look at that. You can make the case that Correa's done a lot of good for the country. I mean, the guy, when he was elected in, 2008, right? When he was elected in 2008, he ushered in, years of both political and social stability, incredible amount of infrastructure. So lots of progress on lots of fronts. But he's also a bit of a socialist, and he seems to go very overboard from time to time with his policy proposals as far as mechanisms of control and taxes. So, great that he did the infrastructure, I guess, to a certain extent, but also it'd be very nice to have someone in who is a little more understanding of what it takes for an economy to run.
That was very diplomatic of you. A bit of a socialist?
Well, he says he's not a socialist. I say he is. But
I believe he said he's a 21st century socialist.
Oh, did he? Okay, never mind. Socialist. Yes, I'm learning my diplomacy from you, little by little. So there's that. Another funny, sort of funny...
Oh, well, speaking of the market and, wanting someone who understands the market, he recently came out, actually in November, and said that about the national airline, Tame Airlines, that, what did he say about this? And this is an article that came from today's issue of Cuenca High Life magazine. Well, I'll just tell you what happened, and I'll give you his quote. So they are eliminating several routes, selling aircrafts in an effort to cut an operating deficit that totaled $58 million between 2014 and 2015.
This is the Tame is the domestic state-run. You mean state-run? They were losing money. I know. It's hard to believe. This is the state-run airline here in Ecuador.
So they'll be eliminating flights to 3 domestic locations, the cities of Tena, Macas, and Latacunga, and they'll be suspending international service to both Sao Paulo, Brazil, and Fort Lauderdale, Florida. And so the general manager came out and said, quote, "We're suspending service on unprofitable routes and plan to sell assets to return the airlines to profitability. And if they are not able to do that, they'll be liquidating the airline altogether," which seemed interesting.
And raising taxes on all the other carriers. No, they didn't say that. That's just
they didn't say that, but that's what they'll do. Yeah, and
we're gonna fill this income gap by taxing you more.
Surprise, surprise. So one of the unprofitable routes that will be evaluated and potentially cut is the route from Quito to Loja, unfortunately, which will be terrible for us. But
although the interest, I mean, theoretically, if there's not too much red tape, which there probably is, I mean, a private company could pick that up if, probably not running twice a day like they do now because there isn't demand for that. But 3 days a week or something, you would certainly have demand.
Yeah, that would be ideal. And there's carriers that could step right in, land being one of them.
I mean, one of the reasons Tame, is not profitable on some of the flights is they run them at the most ridiculous hours that known to mankind. I mean, they have flights at like 5:40 a.m. and 6:10 a.m. And then, your next flight is not until the end of the day. So like if you need to get there in the morning, you're driving like 45 minutes out to the airport to catch a, 5 something or 6, just after 6 a.m. flight. And, but shocking that that's not full.
So here's the quote that Correa said in November 2015 about the airline. Quote, "We cannot subsidize the service when commercial companies are able to make a profit in Ecuador." Well, good job, genius. You just figured that out.
Right.
But at least he's figuring it out, better late than never.
Right.
So that's some interesting Ecuador news that kind of
perhaps
ties into the whole, socialism doesn't work idea.
Well, perhaps he can raise taxes enough on the private carriers that they're not profitable either. And then, he'll feel better because everyone will be the same.
Eye for an eye.
Yeah, but that would suck for sure if they cut the Quito to Loja flight. They have not done that. They're just looking at it. There would obviously still be Guayaquil to Loja, which is what I use, but it would be unfortunate to not be able to fly directly to Quito. You'd have to go through Guayaquil.
Right. Plus, I mean, more than about 2/3 of the foreigners who come into Ecuador come in through Quito.
Yeah.
And they do have more international options.
Yeah. Also interesting, backdrop. So domestically, they're talking about cutting flights, and internationally, airlines are picking up Ecuador right, left, and center. JetBlue, I mean, we've mentioned them before, but there's expanded service to Ecuador from all over the world, and they keep announcing new ones all the time.
Right.
Another piece of Ecuador news. So this is also from Cuenca High Life. As unemployment rises, Correa plans to send labor law changes to the National Assembly, saying that a relaxation of some labor laws is necessary to keep Ecuadorians employed. Among the changes is one that would allow employers to reduce work hours and the pay of full-time employees. So basically, they're relaxing the labor laws, which is very good news. Not because I believe in exploiting people, but because the labor laws drive unemployment. The labor laws are overbearing, and they lead to unemployment because businesses cannot afford to comply with the labor laws. And so what a lot of businesses do is they're run family-run businesses because they don't want to get into the whole labor law. They don't want to bring that set of oversight into their company, and so they often don't hire people. And so it's Correa's admitting here. He actually, quote, "We made a mistake with this law," Correa admitted. "We were acting on humanistic principles, but that is not practical under the economic circumstances we face today." Refreshing honesty out of a politician there.
Humanistic principles, huh? What are those exactly?
That we're all equal and everyone gets more, dictated by law. Which is working well in Venezuela. Maybe a good segue. Let me pull the Venezuela article up. And Darnell, I know you had some funny stuff on Venezuela as well. Okay, here we go. Washington Post. This is out of the Washington Post. Where's the date? February 11th. Headline of the article. And the reason I bring up Venezuela, I mean, it's in South America. It's worth talking about briefly, just in terms of regional news. But it's to me, it's interesting because it's really the socialist ideology played out. So you had, Chavez took power in Venezuela, I want to say in 98, somewhere around there. And since then you've had, what is this, 2016. So you've had 16 years, right? 16 years of socialism in Venezuela. And, the country is on the verge of collapse. So Washington Post, prepare for the worst. Venezuela is heading toward complete disaster. The political drama in Venezuela, where a populist authoritarian government is attempting to cling to power despite losing a legislative election by a landslide, tends to obscure a deeper crisis. Though it is awash in oil, the country of 30 million people is facing an economic collapse and a humanitarian disaster. Venezuela already suffers, and some of these numbers just get funny. Venezuela already suffers from the world's highest inflation rate, expected to rise from 275%. Yeah, you thought that was high, wait. To 720% this year. One of the highest murder rates and pervasive shortages of consumer goods, ranging from car parts to toilet paper. Power outages and lack of raw materials are forcing surviving factories and shops to close or limit opening hours. According to a local survey cited by The Economist, the poverty rate is 76%. But what do you mean? In socialism, everybody's rich, right? Compared with 55% when Hugo Chavez, the late founder of the regime, took power, in 1999.
So you're talking about a country that's just 30 million people, that has some of the most productive soil in all the world, and has the largest proven oil reserves in the world, yet people are starving.
Yeah, well, and they're importing food as well. Worst of all, the country is running desperately short of food and medicine. Venezuelans spend much of their time waiting in lines outside stores, but increasingly the shelves are bare. And just to give you the background on that, the government has taken control of food production in Ecuador. And they've also taken...
In Venezuela.
In Venezuela, excuse me. And they've also taken control of purchasing. So they control the production, they control price, they have price controls, and then they also have rationing. That's the word I'm looking for. So, if you want to buy a chicken, for example, in Venezuela, you buy it on the day that your cedula or your ID card says you can buy it based on the numbers. So, that's, and things like cooking oil, chickens, basic goods and
And you have to when you go and go stand in line for hours to buy a chicken, which actually had an old roommate of mine here in Ecuador. His father is married to a Venezuelan woman, and they live in Caracas. And he went to visit him for a couple of months. And he was saying that, they had to stand in line for chickens. Then you can only go on certain days, as you were saying, according to your ID card. And then they mark you to make sure that you don't come back when it's not your time to go.
To try and pay for another chicken.
Right. Because, and what ends up happening with these price controls, too, is that, especially on the border with Venezuela, oh, by the way, to even go and stand in line, you've got to give them, your whole life story to be able to do that. You got to show them your national ID card, your voter registration, a utility bill from where you live to prove that you're not only Venezuelan, but that you live in Venezuela.
To have the right to pay to purchase things.
Exactly.
It's good when government plays the middleman in all transactions. It has great results.
So you've got a situation now in Venezuela where they just, at those prices, at the price-controlled prices, it's not the market price.
Right.
And people in, bordering Colombia are willing to pay more for cooking oil or rice or meat. And so
they're willing to pay the market price.
So what happens? Well, those goods get moved on the black market to Colombia. And then Venezuelans end up having to go to Colombia to buy their basic goods at an inflated price.
Yeah. Here's one or two more quotes from this article. The chairman of the largest domestic food producer has said that if the government does not act quickly, well, I would argue that if the government acts quickly, it will not get any better. If the government does not act quickly, to seek aid, does not quickly seek aid to import food, it will will cause grave harm to ordinary Venezuelans. The math behind these warnings is stark, as economist Ricardo Hausman recently outlined in the Financial Times. At current oil prices, Venezuela will earn less than $18 billion from exports this year, while it owes $10 billion in payments on the $120 billion in debt it has racked up. That leaves $8 billion for imports, but even after contracting 20%, imports were $37 billion in 2015. They have 8 of that. And Venezuela now imports most of its food. Even with a debt default that the markets expect, it's hard to see where additional hard currency will come from. The country broke relations with the IMF almost a decade ago, has no ability to obtain private loans, and has nearly exhausted its liquid reserves. It already owes China, its latest benefactor, $50 billion.
Not only that, but since the new president Maduro has taken office in April of 2013, from April 2013 to December 2015, the value of their currency, the bolivar, fell 97% on the black market, which, the black market actually reflects what people are willing to transact for, which is pretty interesting.
Because they have an official exchange rate. You had that number.
Yeah, the official exchange rate for a while was 6.3, and they've recently moved that up to 10.
10 to 1.
10 to 1.
And do you have the black market rate in front of you?
The black market rate, I don't have the exact number.
This is for the US dollar, by the way.
Yeah. I don't have the black market number in front of me, but it's much, the difference is
it's in the hundreds, I'm pretty sure.
That sounds about right.
Let's see. This says here 16/100ths of a dollar. So a bolivar will get you 16 cents. This says here, but that sounds like the official exchange rate. Here, I'm looking up here. Here we can. This is a Bloomberg article from 2015. Venezuela, the country with 4 exchange rates. Venezuela can simultaneously be the world's cheapest and most expensive country because of its multiple exchange rate systems. A dinner at an upscale restaurant, including drinks, can cost as little as $6 per person or as much as $160, depending on how you do the math. Figuring out the tip isn't any easier. The creation of a new alternative exchange rate this month, which led to a 70% devaluation, has left foreign companies operating in Venezuela with a dilemma. Do they try to pull their money out at the new weaker exchange rate, or hold on, waiting for the stronger exchange rate they were promised by the government? Oh Lord. Let's see. Okay, 4, if you count the illegal black market. Venezuela's government sells dollars for 6.3, 12, and 172 bolivars per dollar. The first 2 rates are used for imports of government-authorized priority goods, including food, medicine, and car parts. The third rate, introduced on February 12th, can be used by anyone who doesn't receive authorization to buy dollars at the first 2 preferential rates. On the black market, $1 currently fetches about 190 bolivars. Wow. So this is old. It's gone up since then.
Yeah, they changed the official rate. This article that I was using came out yesterday, February 19th.
Where was that from?
That was from Bloomberg.
Yeah.
And there's a quote from the president that says, I'm giving orders in an economic emergency to construct a new model, he said in a 5-hour speech. Quote, I say this to the people. I need your support. Yeah. And they're saying, and they go on to say in the article, that he has to tread carefully because the weaker bolivar means that the government will probably raise the cost of subsidized foods most Ecuadorians rely on, but need to wait in line for a week to buy.
Well, here's an article. This is a more recent, January 7th of this year, out of Mises. On the black market, the exchange rate is currently nearly 900 bolivars to the US dollar. That is, if you can find anyone selling dollars, or more importantly, looking to buy the badly tarnished Venezuelan currency. So, vote socialist.
Didn't he also have didn't the president come out with a socialist sneaker as well,
Maduro,
too?
yeah. Because, when your country's falling apart, you got to distract people. So, talk about a presentation. I mean, the president of Venezuela was on stage in a tracksuit presenting a sneaker termed the socialist boot, I think, or the socialist sneaker. And,
the socialist
there you
boot
have it.
that he's going to place on the throats of the people of Venezuela.
Oh, Lord. All right, moving on. But yeah, I mean, the reason, so, Ecuador is not Venezuela, and that's important thing to keep in mind. The president here does have socialist leanings. However, he only took office in 08, and the socialist ideology has lost its appeal here. So you're not going to have a situation like Venezuela, from my perspective, here in Ecuador, and that's I tend to be fairly negative about these things. That's that may be saying something that I don't believe that's going to happen here, because I don't believe the people will accept it like they absolutely did in Venezuela.
But it is a cautionary tale, and I think that's the message that I'd like people to walk away with, is just that those kinds of things are happening to a certain extent all over the world, not just in Venezuela.
Absolutely. Yeah, I was reading some stuff out of Brazil this morning, which I don't have in front of me, but very ugly there as well. Okay, moving on. This, we've talked about a lot on this show about the dollar, about other currencies, debt-based money, investment classes, gold and silver, real estate. If there's blogs about it as well. I think Darnell penned a blog recently. What was the name about securing your food and water?
Yeah, it's like securing your food and water sources now, or something like that.
Okay, so that's maybe 3 blog posts ago. I recently wrote one on the global investment landscape. So if you want to read more about our thoughts on investing and how all of the things that are going on in the world sort of fit together, you can find that now. Yeah, so Darnell's was Why Fundamentals Say Secure Your Land and Water Now. Mine was The Global Investment Landscape. Those are the last 2 blogs you'll see on the website. There's an older one called Asset Classes, which is a featured post on the blog page of the website. So you can get all our thoughts there, and we've certainly talked about it a lot on the show. And the hits just keep on coming. We've been telling you for a long time about the banking system and how that's going to play out, and gold and silver and real estate and all these things. It's interesting from time to time to go and look back. There's an article here from 2013, December of 2013, out of European Parliament News. The headline is Deal Reached on Bank Bail-In Directive. Parliament and Council presidency negotiators reached a political agreement Wednesday on the draft Bank Recovery and Resolution Directive, the first steps towards setting up an EU system to deal with struggling banks. This directive will introduce the bail-in principle by January 2016, here we are, thereby ensuring that taxpayers will not be first in line for bank failures. Right. Taxpayers, I'm not going to get into that, but taxpayers certainly are also footing the bill. But the idea of a bank bail-in, which basically means that your money that's in the bank is confiscated. This is now, which they did to some degree in Cyprus, and we all saw what happened in Greece, and we've seen with the bank bailouts in the U.S. This is now not law, it's policy. This is now policy. So, your savings accounts or your bank accounts are not safe sitting in banks which are insolvent, and they're all insolvent. Even the ones that have some cash on hand are still insolvent, and that's we can get into that. That's the reason they're insolvent, is because of the banking rules and laws surrounding how money is allowed to be lent when the banks don't have money. So interesting to look back on that and then think about what happened over those next years with the bailouts and bail-ins and so forth taking place around the world.
Yeah, we had there were a couple of other articles. I know the Larry Summers one was one I wanted to cover, but there was another one that you had that might have been a better segue. Oh no, that was it. That was it.
Well, here, actually, you know what? You're right. While we're on this subject, there's a couple others we can talk about. So this is out of Zero Hedge from the 15th of this month. The headline is "The Euro Tumbles as Draghi Admits ECB Will Quote Buy Busted Bank Loans," and I'm not going to read the article. They sort of they basically said they won't buy the loans. They won't buy the loans, but they like put the mechanism in place to be able to do so, kind of thing.
Yeah, back in 2013.
Yeah, right. So that's talking about bail-ins and bailouts. There you go. And again, I want to just make clear for people. So when we're talking monetary policy, and we hear governments or central banks talking about what's the word I'm looking for? I forget. But for example, in the U.S., they use the term stimulus, but it all leads to easy money policy. And so what you're talking about when central banks are talking about buying bad loans, or governments are talking about stimulus, or central banks are talking about stimulus, all of this equals printing. And the more printing, because we have a debt-based monetary system, the more printing that takes place, the more debt is incurred by central banks and governments, namely governments, because they're the ones that are paying back the interest on the printed money to the central banks. So when you hear those terms like stimulus, or when we're in this very low interest rate environment, which we talked about a bit, I think, last week, what that means is you're going to see the money supply increase, which it has exploded over the last 10 years, and you're going to see debt increase because those two things are one and the same. So I think that's just important to understand when you're talking about these things. Another article out of Mises as well from February 11th, European central banks get ready for more easy money. So, this is what we're talking about. On January 21st, 2016, ECB President Mario Draghi signaled that the governing council, the governing council may provide more stimulus at its next meeting in March. Quote, "There are no limits to how far we're willing to deploy our instruments," Draghi predicted. The ECB president is of the view that the monetary stimulus undertaken by the central bank since June 2014 had strengthened the euro area's resilience to recent global economic shocks. The yearly growth rate of the ECB balance sheet, an indicator of monetary pumping, jumped from minus 8.5% in December 2014 to 31.3% by December 2015. While the policy rate of the ECB stood at a record low of 0.05%. And it goes on. But the point is, governments around the world are printing money. And go ahead.
And they're looking for ways to finance these negative interest rates by using capital controls and keeping more money in the system.
Exactly.
As the former Treasury Secretary under Clinton and the former director of the Council for Economic Advisors in the White House, Larry Summers, had mentioned in a blog post he put out, an op-ed, from the Washington Post this past Wednesday, February 16, titled, "It's Time to Kill the $100 Bill."
Yeah, and this is just part of a war on cash, which we've also outlined before and in blogs. But this is going on all over the world because they would like to lock you into whatever they would like to do, and that's a lot easier to do if all transactions are digital.
Right, exactly. So in his current role, Larry Summers is the Charles W. Eliot University professor at Harvard. And he is overseeing the Mostafar Romani Center for Business and Government. They just recently put out a paper that talks about how essentially paper money is a way for tax evaders and proponents of bank secrecy and terrorists to finance their operations.
Drug dealers.
So it was pretty interesting. In the op-ed, he says the fact that, as Sands points out, he's referring to Peter Sands, who is the author of the paper, points out in certain circles the 500 euro note is known as the quote unquote Bin Laden, confirms the argument against it. Sands' extensive analysis is totally convincing on the linkage between high denomination notes and crime. He is surely right that illicit activities are felicitated when $1 million weighs 2.2 pounds, as with a $500 euro note, rather than 50 pounds as it would be if they were $20 bills, or if $20 bills were the highest denomination note. So notice what he did there. He's talking, the article is titled, the Kill the $100 bill. He's talking about the $500 euro note, the $100 bill in the US, as well as the $50 bill. So just very interesting that they're implying that somehow I'm a terrorist if I use a $100 bill to buy something. And he goes on to say, more generally, at a time when, he's equally correct in arguing that technology is making whatever that is making $20 bills or eliminating the need for high denomination notes in legal commerce.
Right. Yeah, I mean, if you're the local mafia chieftain and you would like to get a cut of every transaction, then you would like those transactions to all run through a very transparent and trackable system. And if all transactions are running through a digital system and you're taking a cut of all of that, it's very easy to get your cut. If I can, walk over to Darnell and be like, hey man, I got $20. You want to sell me that sweater? And I can just hand him the cash and take the sweater. That's a harder thing to get your cut. So, that's what's going on all over the world. Governments are trying to phase out cash.
And he closes by saying, more generally, at a time when such a demonstration is very much needed, a global agreement to stop issuing high denomination notes would show that the global financial groupings can stand up against, quote, big money and for the interest of ordinary citizens.
So it's in the interest of ordinary citizens to phase out high denomination notes.
Because, only terrorists use $100 bills.
And 50s as well.
So interesting stuff.
Along that same line, and this article actually talks a little bit about the article that Darnell just pointed out. This is from Simon Black at The Sovereign Man. Came out on February 17th. Title of the article is The Ban on Cash is Coming Soon. And I'm probably just going to read the whole article. It's really interesting. This is starting to become very concerning. The momentum to ban cash, and in particular high denomination notes like the $500 euro and $100 bills, is seriously picking up steam. On Monday, the European Central Bank president emphatically disclosed that he is strongly considering phasing out the $500 euro note. Yesterday, former U.S. Treasury Secretary Larry Summers published an op-ed in the Washington Post about getting rid of the $100 bill. Prominent economists and banks have joined the refrain and called for an end to cash in recent months. The reasoning is almost always the same. Cash is something that only criminals, terrorists, and tax cheats use. In his op-ed, Summers refers to a new Harvard research paper entitled Making It Harder for the Bad Guys, the case for eliminating high denomination notes. Those Bin Laden notes that Darnell's
I wonder, in those same circles, did they happen to be aware that Bin Laden was a CIA asset?
Right. No, but they don't talk about that, nor dumping him in the ocean in the middle of night with no one watching, off a boat. And then,
because they didn't want to incite violence, but they didn't use that same principle when they hung what's his name, Saddam Hussein, on TV, or shot what's his name, the guy from Libya, Gaddafi, in the street.
Right.
They weren't worried about it inciting any animosity from them.
Then, I mean, for the SEAL team that supposedly raided Bin Laden's compound and got him, like,
they killed
they're almost
all
all dead now. Yeah. There's like, I don't remember what it was. There was like 36 people or something, like 19 of them or 20 something of them are dead now. But, don't mind the man behind the curtain. That title pretty much sums up the conventional thinking, and the paper goes on to propose abolishing, among others, $500 euro and $100 bills. The author claims that, quote, without being able to use high denomination notes, those engaged in illicit activities, the, quote, bad guys of our title, would face higher costs and greater risks of detection. Eliminating high denomination notes would disrupt their business models. Personally, I find this comical. I can just imagine a bunch of bureaucrats and policy wonks sitting in a room pretending to know anything about criminal activity. It's total nonsense. As long as there has been human civilization, there has been crime. Crime predates cash, and it will exist long after they attempt to ban it. Perhaps even more hilarious is that many of these bankrupt governments have become so desperate for economic growth that they now count illegal drug activity and prostitution in their GDP calculations, both of which are typically transacted in cash. So ironically, by banning cash, these governments will end up reducing their own GDP figures. What's really behind this? Why is there such big movements to ban something that is used for felonious purposes by just a fraction of a percent of the population? Cash, it turns out, and this is where it really gets interesting, cash, as it turns out, is the Achilles heel of the financial system. Central banks around the world have kept interest rates at near zero levels for nearly 8 years now. And despite having created massive bubbles and enabled extraordinary amounts of debt, their policies aren't working. Especially in Europe, the hope of stoking economic growth and even the sickening goal of inflation has failed. So naturally, since what they've been trying hasn't worked, their response is to continue trying the same thing, and more of it. Interest rates across the European continent are now negative. Japanese interest rates are now negative. And even in the United States, the Federal Reserve has acknowledged that negative interest rates are being considered. They have no other choice. Raising rates will bankrupt the governments they support and derail any fledgling economic growth. Look at how low interest rates are in the U.S., and yet fourth quarter GDP practically ground to a halt. They simply cannot afford to raise rates. As global economic weakness continues to play out, central banks will have no other option but to take interest rates even further into negative territory. That said, negative interest rates will be the destruction of the financial system, because sooner or later, if banks have to pay negative wholesale interest rates to each other and to the central bank, then eventually they'll have to pass those negative rates on to their customers. Many banks have already started doing this, especially on larger depositors. We've seen this in Europe, where some banks charge their customers negative interest to save money, and in some extraordinary circumstances pay other customers to borrow money. It's total madness. There's a certain point, however, when interest rates become so negative that no rational person would hold money in the banking system. Eventually, people will realize that they're better off withdrawing their money and holding physical cash. Sure, cash doesn't pay any interest, but it doesn't cost any either. If you have $200,000 in your savings account at negative 1%, you'd have to pay the bank $2,000 each year. Clearly, it would make more sense to buy a safe and hold most of your money in cash. Problem is, the banks don't have the money. For starters, there's literally not enough cash in the entire financial system to pay out more than a fraction of all bank deposits. More importantly, banks, especially in the US and Europe, are extremely illiquid. They invest the vast majority of your deposit in illiquid loans or securities of dubious long-term value, whatever the latest stupid investment fad happens to be. And many banks have been engaging in a substantial balance sheet shift, rotating bonds from what's called available for sale to hold to maturity. This is an accounting trick to use to hide losses in their bond portfolios, but it also means that they have less liquidity available to support bank customer withdrawal requests. The natural side effect of negative interest rates is pushing people to hold money outside of the banking system. And, that's why you're seeing all of these pushes to get people in the banking system, because they know negative interest rates are what they're planning. Yet it's clear that a surge of withdrawal requests would bring down that system. Banks don't want that to happen. Governments don't want that to happen. But since central banks have no other choice than to continue imposing negative interest rates, the only logical option is to ban cash and force consumers to hold their money within the banking system. Exactly. Make no mistake, this is absolutely a form of capital controls, and it's coming soon to a banking system near you. Analysis?
Analysis from our policy wonks. The Wonk blog.
Right. So, there you go. We've touched on a lot of this stuff before. And again, I mean, I think this is why, it's like risk is just not priced in to most assets right now in the world in both ways. So, I mean, for example, you can buy a Spanish government bond that's paying like practically zero or even negative. I'm not sure, but paying near zero. And, it was 2-3 years ago that Spain was talking about defaulting on debt. So that's a high risk investment to buy a Spanish bond, and it's not reflected. That should be paying 15% or some reasonable rate of return for the risk inherent in Spanish debt, yet it's not. And that same point can be made on the other side. So, look at the risks to the banking system, look at the risks to government solvency. Is that priced into assets like gold and silver? Not at all. What about the risks to the global food supply? Is that priced into farmland? Not at all. So, you can sit with your money in high risk places like the stock market, banks, bonds, paying very little, or in the stock market, that's had a great run because as we have a zero interest rate environment, money printing environment, that money needs to find a home and it needs to find an inflation beating rate of return, and it very often finds the stock market. I mean, if you look at a chart of the money supply and a chart of the stock market, they're very, very similar charts. So you can do that, or you can put your money in assets that do not have the risk priced in, but do not have the risk. Right. So, you can buy for very cheap farmland or gold and silver, and you're hedged against the global financial risks, and you're buying it at a price that doesn't reflect the risks to the global financial system. So, there's my 2 cents on what you should do with your money.
Right. I mean, if you think about what gold prices were in 2013 and compare that to where they are now, you've had more money printing, you've had more debasing of the currency, and yet gold and silver are below their 2013 prices.
Right, way below. I mean, I don't remember specific. Yeah, 20. Oh yeah, right, way below. Yeah.
Yeah, because what is gold now? Goes around what,
1,100 or 1,200. Yeah.
In 2013, you're looking at prices, above $1,300 an ounce.
Yeah, I mean, silver was up to 50 at one point, or 30. What was it? You know what? I'm talking without. Let me just check a chart. I'm terrible with numbers. I always forget. But yeah, I mean, silver's dropped, and gold. I mean, they generally trade together. Has dropped a huge percentage since its highs when people were kind of going crazy for it around 2013, like you're talking about. Mm-hmm. Yes. So, it's taking a minute to load here, but yeah. So that's some of the investment stuff. I will look up this chart momentarily. Another interesting piece of news is that airlines are considering requiring proof of vaccination, not only for international travel, but for domestic travel as well. So that's mildly scary.
Yeah. Yeah, that'll probably be the end of my time getting on planes at that point. Check your vaccination history.
Yeah.
They'll probably ask you, about your tax returns as well, too.
Right. Right. Okay, here we go. Here's a 5-year chart of silver. Okay, so I was way off. Oh, no. Well, this only goes back to 2014. Ugh. Keep talking. No, I mean it.
All right. So yeah, gold and silver. I mean, the other point that I would make along those lines as well too is, farmland here in Ecuador, really all over the developed world in places where they're dependent on oil revenue, and oil revenue has fallen a good deal year over year, and so you've got a lot of countries that are not using the dollar, unlike Ecuador, say, for example, in Brazil or in Colombia or in Chile or Peru, where, their currencies have fallen in excess of 50% year over year, where you can find, farmland in those countries as well, too. In Ecuador, that's played out a little bit differently. You do have the dollar, but at the same time, if you compare those two countries, well, and the U.S. money supply is abundant, and here U.S. money supply is scarce, and so you've got people who maybe have overextended themselves with loans who now have to find a way to repay those loans, and so what are they doing to raise the capital for that? Well, they're liquidating their assets and land, which creates a situation where you have many more properties for sale than the current market demand would suggest, and because of that, you've got a lot of great deals. Mainly the one that we were talking about earlier in the show that recently came down from 250 to 218. Abundant water sources, lots of places to cultivate or to build, and it's a property that has real intrinsic value.
And there's a couple others,
Right.
several others we
Several
have
others.
that meet all those requirements as well in the same price range. I mean, between like 220 and 240, basically, for gigantic productive fincas with water and everything. So here we go. So in 2011, it looks like March 2011, silver got up to 40, just under 47. Currently at 15 and change.
Wow.
I mean, yeah.
So if you charted that against the money supply, those would be going in the opposite direction.
Right. And that's why it's such an amazing opportunity right now. Exactly.
In gold?
Let me pull gold up.
Yeah, that'd be interesting to see as well, too. Probably not as extreme.
No, not quite, but similar chart. So gold in July 2011 got up to 1838 thereabouts.
Wow, 1838.
And then got all the way down at one point to 1050 or 60 not that long ago.
Right. A couple months ago or so, right?
Yeah, a few months. Yeah. So again, you've got assets, and we've talked about this before. These are manipulated markets through naked short selling. The big players can do whatever they want essentially with the price of paper, gold and silver, and that's partly because the assets, the physical gold and silver, don't have to back up the paper contracts of gold and silver, and you can naked short sell. So I don't have to borrow the shares to short sell. So if I want to put downward pressure on the price of the paper price of the metal, I can do so very easily, which happens all the time. And again, that's why you have a chart that doesn't make any sense. You've had money printing through to oblivion, and what does that do? It creates inflation. What's the hedge against inflation? Gold and silver. What have gold and silver done since 2012? Dropped precipitously. So, that does not make any sense. So there you go. Okay. What else did we want to cover today? Did you have other stuff before we wrap up?
I think that was it.
Okay. Interesting Simon Black article as well about the government, quote, borrowing your retirement savings. Maybe we'll get into that next time, but that is also, on the docket. We've been talking about that for a number of years, actually.
Yeah, so that we should cover next week as well as that article about the Baltic Shipping Index as well.
Oh, right, which rebounded slightly since that news came out. Basically, the Baltic Dry Index, they call it? Yeah. Which is widely considered like the best leading economic indicator, hit a record low maybe 3 weeks ago. And rebounded a little bit, you've got that in tandem with stores closing locations all over the states in the world and laying people off as well. I mean, major corporations. such as IBM and J.C. Penney and a number of others.
Well, good. Anything else?
No, that's I could have. I'm telling you, this was better the first time we recorded.
Yeah, no, it was much better.
We lost our luster here a little bit.
No, the energy was a lot better the last time. And the segues as well too.
Yeah.
But hey, we'll get him next time.
You'll have to take our word for it.
Well, just to wrap up, for more information about properties, blog post, podcast, you can find all that information on our website at www.abecuador.com. That's A as in apple, B as in boy.com. You can also reach us toll free from the U.S. and Canada at 888-999-0948 or via email at info@abecuador.com. Thanks for tuning in and check in with us next week. Take care.